You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borg. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Thursday, 6th day of March, 2025. Thanks so much for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. Michael is still on vacation. A long overdue and much deserved vacation, I might add. He's taken some vacation since 2008, but he always took his laptop and still managed to do the room in the morning. Sometimes with good internet, sometimes spotty internet, whatever the hotel had to offer. But this time he made a decision to just completely unplug. And I think that's going to be so good for him and for his beloved, Jada. A chance to just relax and not have to worry about business and trading. Just everybody needs that. So, that said, we really look forward to seeing him back in the saddle Monday morning. Now, on a typical week, we do two live trading rooms, or we do two live broadcasts every trading day. The first one is the live training room from 9:30 a.m. to 11:30 a.m. Eastern. Now, that broadcast is reserved for members only and those who are taking their 1-week free trial. If you have not taken your 1-week free trial, wait till this weekend, okay? Because Valerie needs to reset the whole thing, get the new link, get the password, and then go to mytradingiq.com, and at the very top of the page, you'll see a purple button. It says 5-day free trial, no credit card required. Just click that button, fill out the registration form. We'll get you indicators indicating, and then you'll get 5 consecutive trading days in the live training room. In fact, for 5 consecutive trading days, we treat you just like you were a member, just like you were already a passport holder. You have access to everything. No credit card required. We want you to have a clear head so that at the end of your trial, you can make a well-informed and intelligent decision whether or not what we do is right for you. mytradingiq.com. Now, when the live training room ends each day, we take a 30-minute break and come back for this broadcast, the afternoon broadcast, which is open to the public. That's everybody, everywhere on planet Earth with an internet-connected device. There's 2 different ways to join the afternoon broadcast live. The best way, you only have to do it once. Go to mytradingiq.com, and this time scroll down the page to where it says Noon Broadcast. Click the link, fill out the 30-second registration form, and you're done. What will happen going forward is every trading day, about an hour before this broadcast starts, you'll get an email. In that email, there will be a link. So at 12 noon Eastern, all you have to do is click the link in the email, and it'll automatically log you into our platform. The benefit of doing it that way is you have access to the question box, so you can ask questions and participate in the discussion. Of course, there'll be days when you're out of the office, away from the desktop, but you still want to join live. And there'll be days when you're busy, can't join live, but want to get caught up later. You can do both of those via our YouTube channel, which is easy to remember. youtube.com/CFRN. You already got the YouTube part memorized, so really all you have to remember is CFRN. Not only do we broadcast live every trading day on our YouTube channel, as we're doing right now, simulcasting, but we also archive each and every daily broadcast. Currently, there's over 2,700 daily episodes archived for your educational and viewing pleasure. And thanks to the power of YouTube, it's a great way for anyone who's new to see how we've evolved over the years. You can scroll back 6 days, 6 weeks, 6 months, 6 years, even more. Obviously, you're not going to watch them all. Just poke around, pick some days at random. Again, it'll give you a very clear picture of from whence we came to where we are now. The afternoon broadcast each day, this is the schedule. Now, this part right here, where we get the recap of the live training room and do some trading on the TradingView platform. That won't happen today or tomorrow, but we'll be back for a full schedule next week. So let's get into our daily devotional. We're currently on day 7 of 7, and the topic is how to deal with complicated people. Chances are you know a few, and chances are you might be one yourself. I know I am. Our scripture today, Ephesians 4, verses 31 and 32. I'm going to share with you from the Message translation. Make a clean break with all cutting, backbiting, profane talk. Be gentle with one another, sensitive. Forgive one another as quickly and thoroughly as God in Christ forgave you. Again, Ephesians 4, verses 31 through 32. So we've been talking now for 6 days. This is day 7 of 7. Each day we've talked about different ways to deal with complicated people. And so as we close out this devotional topic, you need to know when it's time to move on. When you read about Jesus' life, ministry, and death, there are a lot of impressive moments. If I had to pick one that really sums it all up, though, I think it would be something he said while hanging on the cross between 2 criminals. He looked out at the people who had betrayed him and who now mocked him, and he prayed, "Father, forgive them, for they do not know what they are doing." Luke 23, verse 34. I don't think that would have been my prayer. I would have said, "Father, you know what to do. Make sure they get what they deserve." At least that's what I would have thought if I had just been brutally beaten by other humans. Somehow, Jesus, in his moment of greatest agony, was able to forgive. He relinquished his right to revenge, and he chose the path of love. This is something you do for you. Bitterness doesn't hold other people captive. it holds you captive. Likewise, forgiving someone doesn't free them, it frees you. Forgiveness is a choice that changes you, even when they don't change. One time, Peter asked Jesus how often he should forgive someone who had sinned against him. It sure seems like he had a specific guy in mind, but he asked if 7 times was enough. Jesus answered, I tell you, not 7 times, but 77 times. Matthew 18:22. He was reminding Peter that even if the unnamed nemesis never changed, Peter had autonomy. He had power over his own life. And if he chose ongoing forgiveness, he was choosing ongoing freedom. Complicated people do complicated things. Wish that wasn't the case, but we all know it is. Frankly, we've all done some complicated things too. We don't have to keep an exhaustive running list of all the people we hate and the hurts they've caused. Like Jesus, we can choose to release our right to revenge. God is the judge anyway, not us. That's why Jesus prayed to God rather than calling down fire and brimstone from heaven. He didn't have to take revenge. It was in God's hands. So with regard to the complicated people in your world, do you need to release any hurt today? Do you need to let a heart of love replace a desire for revenge? If so, give those painful things, whatever they are, to God. He's the only one capable of carrying them. And you can trust Him with your pain. The path of forgiveness is the path of freedom, healing, and peace. Let's pray. God, you've seen the pain and the injustice that we've all experienced. Today we put those things in your hands. We release bitterness, our need for revenge. Help us forgive those who have hurt us, just as you have forgiven us. Heal our heart and grant us freedom. It's in Jesus' name we believe and pray. And everybody said, Amen. Amen. And happy Thursday. Hump day yesterday, we made it over the hump. But the markets, a little different story. Things started to look kind of rosy yesterday afternoon. I posted about it in the discussion group, only to wake up this morning and see that. Well, we'll see it all in a minute. Let me give you the numbers from around the world. We'll start here in the U.S. with the cash markets, or the indices as they're called. Currently the Dow is down 477 points, well over 1%. NASDAQ down 406, well over 2%. S&P 500 down 100, 1.75%. The Russell 2000, our man in the street, down 24 points, well over 1%, almost 1.25%. In the commodity basket, crude oil down 66 cents. Trading 65.65 last. That's a drop of 1% or roughly $660 per contract traded. Gold down $2, trading 29.2370 last. Silver up 10 cents, trading 33.24 last. In the Asian markets at the close, the Nikkei posted a gain of 286 points. The Shanghai rose 39, and for the Shanghai, that's a gain of well over 1%, almost 1.25. The Hang Seng gained 775 points, well over 3.25%. And in the European markets at the close, FTSE down 73, almost 1%. The DAX the DAX up 338, almost 1.5%. And the CAC up 23. So, we had a green day in Asia. It was a mixed day for the UK. And so far it is a big red radio Thursday here in the US of A. Now, as I often say when we have mixed markets, as futures traders, we like to see the four major indices the same color. They could be all green or all red, because with futures you can be long, short, long again, all in the same hour if that's what the chart in front of you tells you to do. It can be a little more complicated with stocks, but with futures, it's really quite simple. And amazing when you think about it. So, if we can be long or short, it doesn't matter if they're all four green or all four red. Now for investors, it's another story, but I'm talking about active intraday traders. And the reason behind it is when the four major indices are all the same color, that's when you get better follow through on your trades. As an example, on the ES, let's say you're trying to get your 2 points for the day. It gives you 1.5. And it looks like it's going to give you 2. And then bang, you're out at break even, or if you've trailed your stop, wherever you've trailed it to. And that process just keeps repeating itself. Maybe you jump to another market. But when they're all the same color, pick any one of the big four, and chances are, if you have a valid window of opportunity, you'll get your full 2 points. You know how some days you take one trade and you're done for the day. Other days, you gotta grind it out. So take notice, on the days you gotta grind it out, check and see if the markets are mixed. And on the days when everything just seems to flow like honey, check and see if they're all the same color, red or green. Just something to think about. News. The Supreme Court ruled yesterday that the Trump administration must release roughly $2 billion in funds for foreign development assistance, rejecting a White House request to put a lower court's ruling on hold in an unsigned 5-4 decision. This blew me away. The decision, outlined in a single paragraph, is the biggest by the court, affecting moves by the new Trump administration. So any lower court, federal judge, I guess they're the ones running the country. Not the president, not Congress. Anything the executive branch wants to do, some yahoo from Podunk, Idaho, or Mud Lick, Iowa, can strike it down. All the opposing party has to do is make a few phone calls and find a judge that's willing to rule in their favor. Boom. Now, that is not the democracy our forefathers had in mind. We have a broken system. How are we going to fix it? Well, that would require Congress to cooperate from both sides of the aisle, because while the Republicans are in power now, the Democrats, of course, dream that someday they'll be back in power, and I have no doubt if Jesus tarries, that will be true. Are they going to want to be treated the same way every time they put forth an important issue? Some federal judge in Mud Lick just strikes it down. Now, one of the dissenting statements from the Supreme Court yesterday said, "I'm just stunned by this." I don't know what else to say. And this money is going to stuff like transgender mice. I mean, you've heard the list. I know you guys watch the news. Now, those are your tax dollars at work. That money didn't just fall from the sky. $2 million spent on transgender mice came out of your paycheck, or however you do your taxes. Now, the funds represent a small part of the U.S. Agency for International Development's roughly $40 billion annual budget and relate to work already performed before February 13th. The ruling does not affect a larger freezing of the agency, which has been effectively shuttered and wrapped into the State Department. In related news, congressional leaders are negotiating paths to keep the federal government open ahead of a March 14th funding deadline. Here we go again. We got a president that wants to balance the books, wants to erase the deficit with sound fiscal policy and common sense. Why won't they let him? It's unbelievable. It really is. The inventors of reinforcement learning, a foundational technique in artificial intelligence, were awarded the Turing Award yesterday, the computer science equivalent of a Nobel Prize. North American academic researchers Richard Sutton and Andrew Bartow outlined the mathematical framework for the technology in a 1998 book, which laid the groundwork for popular chatbots like ChatGPT. The pair will share a $1 million prize. Reinforcement learning was first theorized by the award's namesake, Alan Turing, in the 1950s, when he argued that sufficient computing power would allow machines to learn through experience like humans and animals. Bartow and Sutton began modeling this technique mathematically in the 1980s, seeking ways to incentivize computer systems to seek out rewards and avoid failures. The technique laid the groundwork for the recent AI revolution, rooted in large language models, which are often trained via reinforcement learning with human feedback. Now, if you're not familiar with Alan Turing, he was a very, very smart guy. Kind of up there with the, Tesla's more than a car. It was actually Nikolai Tesla was a person. And of course, Tesla is named after him. But this guy, Alan Turing, there's a movie, you can probably find it on Netflix. It's Alan, A-L-A-N, Turing, T-U-R-I-N-G. If you don't know who he is, find that movie and watch it. It's pretty enlightening. There's a twist to the story and an ending I don't want to spoil. So I'm just going to trust you to go search Netflix. Just put in Alan Turing. I'm sure you'll find it. Pakistani intelligence officials confirmed the arrest of a suspected senior planner of the 2021 Kabul airport bombing yesterday, a day after President Donald Trump announced the arrest in his address to Congress. Now, we all remember the images of the failed pullout of Afghanistan, where we left behind, I don't know, about $100 billion in state-of-the-art military technology. The same weapons that are being used to... That's your tax dollars at work. But I digress. The suspect, Mohammed Sharifullah, was captured in Pakistan's Balochistan province after a coordinated effort with U.S. intelligence. Sharifullah was extradited to the U.S., and if I've mispronounced your name, I don't care, was extradited to the U.S. and appeared in a federal court yesterday to face charges of providing material support to a foreign terrorist organization, resulting in death. If convicted, he faces a maximum penalty of life in prison. Officials say Sharifullah is a member of ISIS and admitted to planning the deadly suicide bomber attack at the Kabul airport's Abbey Gate, which is not where we should have been trying to evacuate people. We had our own perfectly good airbase. How much grift had to have taken place behind the scenes to orchestrate such an incredible fiasco? I don't know. It's mind-numbing. The bombing took place amid the withdrawal of U.S. forces from Afghanistan, killing 13 U.S. service members and roughly 170 Afghan civilians. The attack was part of the chaotic departure that concluded America's longest war and undermined public confidence in former President Joe Biden's administration. You think? Let's go to Wall Street. Not that that's going to cheer you up. U.S. President Donald Trump's tariffs are reshaping U.S. trade policy and overhauling decades of free trade agreements with friend and foe alike. We've talked this to death, pretty much. Corporate America's just talking about nothing but tariffs. It just goes on and on and on. From Bloomberg, the U.S. trade deficit widened to a record in January as companies scrambled to secure goods from overseas before President Donald Trump imposed tariffs on America's largest trading partners. The gap in goods and services trade widened 34% from the prior month to $131.4 billion. The deficit was larger than all but one estimate in a Bloomberg survey of economists. The value of imports rose 10%, to a record $401.2 billion, while exports increased 1.2%. The figures are not adjusted for inflation. Trump said he was going to do it. The American people voted for him to do it. Now he's doing it. Promises made, promises kept. The early impact of job cuts from Elon Musk's Department of Government Efficiency is appearing in some labor market numbers. Today, data from job placement firm Challenger, Gray, and Christmas showed job cuts soared in February to 172,000, their highest monthly level since July of 2020. This marked a 245% increase in layoff announcements from the month prior. The firm noted cuts from DOGE and retail woes drove the increase in job eliminations. Well, you know, when you find you've got people who aren't showing up to work, just sitting home, chilling, shuffling a piece of paper, maybe shuffling a piece of paper. Because remember, they freaked out when somebody asked them, "Hey, what did you do last week? Could it was a pulse check. Could you tell me 5 things you did last week?" Oh my goodness, mass hysteria. How dare you? I'm a federal employee. I'm a bureaucrat. Nobody voted for me. I was appointed to this position. How dare you? I'll try not to get too worked up. I'm going to guess that a lot of those jobs lost, America will be better off for it. They'll be replaced with someone competent, if the quote-unquote job they were doing actually matters. With the impact of DOGE actions, as well as canceled government contracts, fear of trade wars, and bankruptcy, job cuts soared in February. Separate data from the Department of Labor, also released Thursday today, showed 1,510 weekly unemployment claims were filed in the District of Columbia in the week ending March 1st, down from 1,893, but still significantly elevated compared to data over the past year. Now, if you're doing an important job for the government and you're doing it well, and you actually go to the office, you know, and are part of a team, then I dare say your job is safe. Fraud, waste, and abuse. Yes, that means some people are going to lose their jobs. Deal with it. Often, this is from Reuters, a political punching bag for MAGA Republicans, asset manager BlackRock may have bought some conservative credibility along with its purchase of 2 critical ports on both sides of the Panama Canal. We talked about this yesterday a bit. The $22.8 billion deal with Hong Kong-based C.K. Hutchison for those and other ports were hailed by U.S. President Donald Trump in his address to Congress Tuesday night, giving BlackRock and its CEO Larry Fink political capital to get back in the Republicans' good graces. Of course, BlackRock is down $12 a share today, or 1.5%. BlackRock has been restricted or outright banned by a number of Republican-led states from managing retirement or treasury funds over the company's policies on environmental, social, and corporate governance investing. Climate change. Some of the smartest people on planet Earth can't manage your retirement fund because they don't buy climate change. That's a shame. But now some red states are taking another look. BlackRock working with the Trump administration is going to be positive for everybody. I can see that opening up some doors for them. That's from the Indiana Treasurer, Daniel Elliott. A Republican, Elliott last year helped push BlackRock out of a contract to manage a nearly $1 billion global bond portfolio over concerns about its ESG efforts. Elliott said he would now be willing to consider BlackRock's eligibility for future contracts if they were presented to him. Republican treasurers in other states have told him they are also encouraged by BlackRock's role in the deal, as well as other recent moves by Fink to diminish ESG efforts. And last, the scariest word in economics is back. What do you think it is? After sampling an economic cocktail of inflation and slowing growth stirred up first by tariff uncertainty and now by actual tariffs, hints of another unsavory concept are wafting through. Stagflation. Might as well just do the depression and get it over with if that's where we're headed. Stagflation it's not good. Wall Street Journal's talking about it, Bloomberg's talking about it, and so is CNBC. Even bringing up the word is an indicator in and of itself, feeding a cycle of expectations and altered behavior. Fresh data flashing weakness has reinforced the souring perception of the economy. Companies have eased up on hiring and manufacturing activity has slowed. Commentary and modeling from market observers have also taken a turn. A risk of recession is back in the conversation. And Wall Street, fresh off the president's joint address to Congress, is eyeing S&P 5500 as well as S&P 6000. Stagflation's ominous specter of lifeless growth and higher prices is especially concerning because of the limited range of tools available to wrangle it. And as Apollo chief economist Torsten Slok pointed out in a note to clients, a trade war by definition is a stagflation shock, higher prices, and lower sales. Now, my opinion, after 4 years of insane lunacy, where we spent so many billions of dollars on so many things that do not in any way benefit the American people, again, that's your tax dollars. In a month, I think we've made some pretty good progress. In the new Trump context, Wall Street sees rate cuts arriving not with applause for vanquished inflation, but as a salve to reverse an economic slowdown and stave off a deteriorating labor market. Now, the first time Trump was president was the first time he was president. He learned a thing or two. Now, he had a pretty good 4-year run fighting off these endless lawsuits, Russia collusion, blah, blah, on and on. But now he's back. And now he's educated. He's not a career politician. Biden had been in politics 40, 50 years, whatever it was. Trump was a businessman. So when he took the Oval Office the first time, he didn't really understand how Washington worked, how one hand, washes the other and you scratch my back. But he saw it. He made it through it. And The other party, they tried everything under the sun to keep him from getting elected again. But guess what? He's back in the White House. Yep. And this time a little bit smarter. All right. Enough of that depression. Local news. Logic 247 is our 24/7 around-the-clock E-mini alert service. Not just E-minis, also crude, gold, silver. Over the last 344 weeks, we have issued over 19,000 individual handcrafted alerts. And what we've averaged on a weekly basis is 20% or less of the alerts being stopped out based on market structure and a very simple process that we teach all of our passport holders in their one-on-one mentoring sessions. This recap was done at 6:30 a.m. Eastern this morning. Since the markets opened Sunday night at 6 p.m. Eastern, we've issued a total of 32 alerts. Still waiting on the outcome of 6. That gave us 26 actionable alerts, of which 5, or 19%, would have been stopped out again based on market structure and that simple process we teach all of our passport holders. Now, the purpose of the logic alerts is to teach you how to read a chart. You need to be able to look at a chart of whatever it is you're trading and instinctively see where potential resistance is, where potential support is, and then the window of opportunity in between just kind of pops out at you. But you got to show up, you got to do the work. So if you want to trade the logic alerts, feel free, but make sure you use them for the reason intended while they're available. Okay? You need to get to the point where you don't need anybody's alerts. All you need is a chart, data, and an account to trade with. That's when you truly become not only a trader, but you become free. Now, long before we had Logic 247, long before we had the concierge trade alerts, and they are different. The logic alerts, each alert has an entry price, an initial target, additional targets, and a final trade to target. And those alerts can come out anytime around the clock, 2 a.m., 2 p.m., as opportunity presents itself. But the concierge trade alerts, they're different. They don't come out around the clock. They're posted as a static report shortly before or after the Globex Open each evening. So last night I managed to, today we all know today is the Thursday session because it's Thursday. But the Thursday session actually began last night at 6 p.m. Eastern. And as we all know, tomorrow is the Friday session. It will begin tonight at 6 p.m. Eastern. Now, Wednesday night I got them out at 5:55. Tuesday, Monday. So far this week, Sunday night was the only night I didn't manage to get them out before the open. Now, on the days they're going to go out before the open, I put a post in the discussion group that says the CTAs will be out at 5:55 p.m. Eastern. And on the days when that's not going to happen, I also put out a post that says I won't be able to get them out before the open. Okay? So, but when possible, when life doesn't get in the way, I like to get them to you 5 minutes ahead of the open. So what that means is all of our members, all of our trial members, had all of these targets last night before the Globex Open, 5 minutes before. S&P, Dow, Russell, crude oil, NQ, gold, and silver. Now, before we go to the charts, I want to show you something real quick. I posted some things yesterday afternoon. Hang on a second. Okay. Gonna have to do a little scrolling here. Hang on. Where did I start those? Was this it? Let me see. Yep. Okay. All right. Oh, we'll just do it this way, I guess. Now, that's my time, Mountain Standard. If you go to the discussion group, it's going to show up in whatever time zone you're in. If you're on the East Coast, it'll be 2 hours ahead. If you're on the West Coast, it'll be 1 hour behind. Telegram reads the clock on your computer. So whatever time zone you're in, that's what's going to show up here. So yesterday at 11:59 a.m. Eastern, I put this up because we had just talked about it during the discussion group. Now that means it was almost 2 o'clock on the East Coast. And we had just talked about this yesterday on the broadcast live. We have a bearish cross here. And when we have a bearish cross, that's when the red line gets below the green line. And it leads to an extended move. The first time price revisits that area will almost always be good resistance. And it was. 3 30-minute candles there trying to break through off that. As discussed on the afternoon broadcast, price is making what is now its third attempt to overcome the previous bearish cross on the 30-minute chart. If it makes it, then be aware of the high of the session put in on the 4:30 a.m. Eastern 30-minute candle as the next potential resistance. Then look at the top of that red candle from yesterday as the next potential major resistance. But didn't happen. You'll see that when we go to the live charts. And if you guys are not paying attention to Stefan's charts in the Telegram discussion group, you're really missing out. This was the Dow yesterday afternoon attempting to reach the CTA long target. That would have been 2:06 p.m. Eastern. Russell attempting to overcome previous bearish cross. NQ overcame its previous bearish cross and was attempting to overcome the weekly trading zone at the time of the post, which was 2:09 p.m. Eastern. Crude is below the lowest weekly trading zone. We're up against resistance at the BBC, but red and falling has turned to blue and climbing, so we might just overcome it. If we do, the lowest weekly trading zone becomes the next major potential resistance. Gold hit both targets, and we still have one more weekly trading zone overhead. Short target, hit the long target. This is just all stuff I posted yesterday afternoon. ES closing in on potential resistance mentioned earlier, then the long CTA, and then the WTZ. Okay, see where we're at? Right there. Price having trouble overcoming the previously mentioned potential resistance. This is the ES. See that was the resistance, and it got right up to it, but then it backed off. It struggled. Then it made another run at it, and foiled again. Tried once, twice, 3 times, and the step line was on the verge of crossing blue and climbing. So if you don't follow the post in the discussion group again, you really should. It will help you in your learning process. Yesterday I said on the afternoon broadcast, if we somehow manage to close the day with a green candle, I would be extremely surprised. See that little spot of green there? So the surprise-o-meter. However, on the 30-minute chart, we really need this pullback in motion to hold. Well, when we go to the live charts, you'll see what happened. And there's a note, CTAs are scheduled for 5:55 p.m. EST. Okay, so all of that's available to both passport holders and those on the trial. Just got to go look. All right, so let's just see where we are today. There's yesterday's green candle that I was showing yesterday afternoon. Can we tighten that up? I guess a little bit. Okay, so we talked about the bearish cross and what the consequences of that could be. We've spiked the 38, spiked the 38, we've spiked that trend line, and I kept talking, or I've been talking all week about the 50% fib retracement. Anytime you hit a 50% fib retracement on a daily chart, it almost always gives you a good bounce. Just so happens that there's a bullish cross. That's when the blue line gets above the green line. When you have a bullish cross that leads to an extended move, the first time price revisits that area will almost always be good support. Does that mean we can't just slice through the 50 and the bullish cross? No, we could. But I don't think that's going to happen. You see, institutional traders, the ones that actually move price because of their enormous account size and the size they trade in, they look at daily, weekly, and monthly charts the way you and I look at 30-minute charts, 5-minute charts, tick charts, and range charts. Again, it has everything to do with account size. Now this low right here, see this little shelf right here? That's what we're dealing with. After that obstacle, there is really nothing from the big picture view to prevent us from hitting that 50. Question is, are we going to get the bounce? With all the negative rhetoric on Wall Street, like those articles I just read you, it's the end of the world, the sky is falling. No, it's not. This is how markets work. Probably the best thing in the world for the markets at this juncture in time would be a 50% retracement. Flush the pipes out. Maybe we even get a 62. But the indices always rise over time. That's how they're designed. The S&P 500, why is it called that? Because it's comprised of 500 large cap companies that have met a long list of requirements by the board over at Standard & Poor's. Now there can only be 500 companies in the index. So in order to put a strong bullish company in, one of the weak stocks has to go. And when a stock gets weak, that's what happens. They remove them from the index and replace them with somebody else. So while this looks really bad, all it's doing is setting the stage for the next mega rally. Now, it doesn't make investors feel good, but for intraday traders, it should make you feel very good, because we don't care which way the market moves as futures traders. As long as it's moving, then there's always a trade opportunity. Now, the green line's called the BBC. It just stands for bull bear cross. When price crosses above the green line, we're bullish and expect higher prices. When price crosses below the green line, we're bearish and expect lower prices. Now, I've been calling for a 50% retracement since back here, okay? And then on this rally, I thought, gosh, we just might take out the all-time historic high. But we didn't. And then when we got this double top, I said, uh-oh. And then blue and climbing turned to red and falling. Then we had this huge day where we closed below the BBC. We got the bearish cross. And we've had a leg and a little bounce. And that's how markets move. It's always in legs. Leg retracement, leg retracement, leg retracement, leg retracement. Price rarely moves in a straight line. When you see a green candle like that, oh, well, gosh, anybody could have traded that. All you had to do was buy. Yeah, well, you don't see that until after the fact. And I got to tell you, inside of a daily candle, a whole lot happens. Inside of a 30-minute candle, a whole lot happens. Most of Michael's trades last 2 minutes, 3 minutes. Just remember. Now, as we're getting close to this 50, look at the step line. It's on the verge of crossing red and falling. When the step line crosses red and falling, we expect a retracement back to the BBC. Then, of course, it will become a question of, does the pullback hold or not? As you can see, the pullback holds more often than it doesn't, whether it's pulling down from above or pulling up from below. But eventually, it trades through. See how it held and held and held and held until it didn't. And then when it pulled from below, it held. And we got a leg, a retracement, and it held until it didn't. Okay. Now, what I suggest is, whether you trade futures, stocks, crypto, Forex, ETFs, spend just 2 minutes with the daily chart of whatever it is you're about to trade on your smaller time frames. Number one, it gives you a free look over the shoulder of the deep pockets that move price. And you're able to identify major areas of support and resistance. Without a daily chart, you might not understand why price suddenly bounced a little bit right here. But I already showed you. It's right here. 90% of the 80, I'll go 80. 80% of the answers you have about the markets can be answered by looking left. Remember, 344 weeks, over 19,000 alerts. 20% of the time, or less on a weekly basis, the market did not do the next high probability thing. Nobody knows what's going to happen next in the market. It's impossible because there's too many participants. From the retail trader all the way up to the institutional trader. I told the story yesterday about the guy with heartburn and had to go down to the corner drugstore. So he pulled that huge order with every intention of putting it back on when he got back to the office. But people all around the world, they don't know. They don't know who he is. They don't know why he's... Obviously, when a person buys, it's because they expect price to go higher. When a person sells, it's because they expect price to go lower, right? You never know a person's motivation. Sometimes you buy to get out of a short position. Sometimes you sell to get out of a... or you have to sell to get out of a long position. So these are all factors that I know you get these emails, you go to the websites, and they can read tomorrow's headlines today. Yeah. You only get those emails, though, when they have a lucky day. You haven't heard from them in a couple weeks. What happened during those 2 weeks? Did you nail it every day? Probably not. If they had, they would have told you. So, anyway, we don't play any games. We just transparently show you the truth as we understand it. And next major support, it's right here. Now, the fact that the step line wants to cross, that's a bit of a head scratcher. Could we potentially get a fast drop down to the 50 going into the close or overnight? And then as the new candle opens tonight, the step line crosses. Now, from the 50, what is it, 56.98? 56, now let's just call it 5,700 to 59.70. That's 270 points at $50 a point. See this 3-day consolidation here. Just pull that step line over. Now, if we were to drop hard, it could straighten it back out. See, look here, I talked about it when it started to lean to the right. But now it's really close to crossing. And once it crosses, we can still drop, hit the 50, and bounce. We won't know until it happens. Because, again, here's the truth. No one knows what's going to happen next in the market. All right, let's do these. ES, the vertical line separates today, Thursday, from Wednesday. Back here's Tuesday. That's that line I had drawn yesterday. I said this is the next potential resistance. I drew that during the broadcast. And then right here, this bearish cross took 1, 2, 3 candles to get above it, only to get right back to that same area, or to get to that area that we had highlighted hours earlier. as potential resistance. Why is it potential resistance? Well, if you understand how markets work, then you know that this high, you see that red candle's got a tiny little wick on top. So it was green until it wasn't. Okay? That makes it an important price, important area. Did we spike it by a point or two and then collapse? Yeah. Okay. But this is market structure. Okay. See this low here? That's that low right there. Should you have been expecting potential support right here? Well, if you look left, yeah. I was conservative. I was basing it off this area right here where the step line crossed red and falling. But I always tend to be kind of conservative. Not only in my way of thinking, but in life and in the markets. So this was the opening candle last night. Everyone had their targets 5 minutes ahead of the open. We just consolidated sideways till blue and climbing turned to red and falling. We dropped to the weekly zone. Now, again, the vertical line separates today from yesterday. Back here's Tuesday. These are the weekly trading zones. They're published every Monday morning at 6:15 a.m. Eastern. Once they're published, they're carved in stone for the entire week. They don't change in any way whatsoever. Even when we get above the highest weekly zone or below the lowest weekly zone, hey, sometimes, especially when you're talking about a period of over 15 years, we've published the zones every Monday for our members and trial members for the last 15 years as of last December. So it's December 14th, 2009. So once we got below the BBC, blue and climbing turned to red and falling, took us to the zone. Only 3 things happen at a zone. 70% of the time is consolidation, 20% of the time is rejection, 10% of the time the slice. So once we got below the zone, it was a relatively short trip to the short target. We actually traded through the short target. And then buyers came in. See, if yesterday buyers felt that, institutional buyers thought that was an important place to buy, and when they did it, that was a red candle. But they bought right there. So why wouldn't they buy there? They did. When the market finds support, it goes and looks for resistance, which it found. At the BBC, remember the pullback holds more often than not. When price rallies up to a weekly zone, we expect resistance till proven otherwise. This zone is 5805/06. When price drops to a zone, we expect support until proven otherwise. Okay? So those 3 wicks sticking up above the zone, that looks pretty bearish. And down we go. And here we are. We put in a low right there. We'd have to go way back to capture that low. Yeah, I'm not going to go back that far. But you can if you want. So where's the next major support? This low right here. What's that low? 57.29. So you could sell 57 34. Get out at 57.32. Have your goal for the day. That is a window of opportunity. Now, you still got one more zone and one more day left in the week. Okay. Now let's go back here real quick. 56.98. We're just going to call that 5,700. What does that look like over here? It's above the lowest weekly trading zone. Is it possible? Is it doable? Yeah, I think so. So hopefully this right here helps you to understand the importance of being able to read a chart, understand what it's telling you, and see the market in multiple time frames. Okay. $56.98 was the actual fib number, I think. We just called it 5,700. So where are we now? 57.48. Price is attempting to rise, but it's got potential resistance here, 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 and obviously here. Okay. On the Dow, here's where we opened last night, consolidated sideways, got below the BBC, consolidated at the zone, and bing, hit the target right at the bullish cross. So, first time down, served as good support. Sent price up a little bit, but not much, because there was a lot of pressure overhead. So that took us down. Step line crossed, red and falling. We got our retracement not only to the BBC, but to the zone, 42,890/95. Now, what do we got here? A bearish cross. Red line got below the green line. Now, while we spike these areas, now you could argue that this high lines up with this high, and it does. But that bearish cross is what I want you to focus on. On the Russell. Hey, I got to put you on hold for just 1 second. So don't go away. We're going to finish the rest of the charts and our good word for the day. But I'll be right back. Hang on. Alright, I'm back. Got to move pretty quick. I didn't realize the time. This bearish cross yesterday, I drawn that horizontal line. Look at how many times we tried to get through it. Finally, we pull back to the BVC. See the step line crossed. Retracement. Pull back held. And then this high right here. Failed to take out that high right there. See it? Blue and climbing turned to red and falling. And down we go, right to the short target. See where the step line crossed red and falling yesterday? Important price, important area. Bang, 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 bang. Bang, until we finally traded through it. Now this zone is 2061/62. This low is 2063. This low is 2061.7. These are the zones that were published Monday morning at 6:15 a.m. Eastern. And this is also the lowest weekly zone for the Russell. Now, based on 15 years of history, by close of business tomorrow, we expect price to be at or above the lowest zone. Have there been markets and weeks over the last 15 years where we close the week below the lowest zone or above the highest zone? Yes. On a few occasions. A handful, 2. 15 years, I don't know, maybe 3 handfuls. Okay. But for the most part, now this is Thursday. Zone doing the job it was assigned Monday morning, 6:15 a.m. Eastern. So we caught a bounce, but we've got resistance times like 4 here. The step line, blue and climbing, looks like it wants to turn to red and falling. When you trade through a short target and come back up to it, it often becomes resistance. Okay. So 1, 2, 3, and then the BVC 4. If we happen to trade through the BVC, if we overcome all that resistance, potential resistance, keep this in mind right here. Okay. We never closed above that bearish cross. We spiked it, never closed above it. That's what I mean about reading a chart. Knowing what the next logical thing is to happen, but also understanding that 20% of the time the market is not going to do the next logical thing for any one of a multitude of reasons. Okay? All right. The NQ. We opened right at the zone. Price was trapped. Support below. Resistance overhead. Right at the zone. We hit the BVC. We bounced up to the zone. Remember, when price drops to a zone, we expect support. When it rallies up to a zone, we expect resistance until proven otherwise. So we consolidated for hours, and then we got below the BVC along with red and falling, dropped to the target, got a little bounce, and then traded through. And then on the bounce, see how the short target became resistance. And then we came back to the zone, consolidated, bounced up to the BVC and the short target again. Resistance, 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 resistance. And it's now pushed us down to this low low of the session, with the lowest weekly zone down here at 19,604/05. Crude. This was the open last night. We quickly got above the VBC along with blue and climbing, and we came just shy of the zone. 66.85 was that high. 86 was that high. But as we pull back to the VBC, the pullback held. One tick shy of the zone. Then we finally hit it. Then we spiked it. And now we've hit the short target. Okay. See with the step line cross red and falling. Important price, important area. We spiked it a little bit and then we bounced all the way back. Support always sends a market looking for resistance. So we hit the BBC. Now we're consolidating. Okay. So if price trades above the BBC, be aware you got a bearish cross right there. Okay. I would wait for price to get well up here. Okay. 66.60 to maybe 66.70. And on the BBC, if the pullback holds, we get another leg to the downside, but we've got potential support there at the step line and potential support at red and falling. The longer we consolidate sideways, the more likely that red and falling will turn to blue and climbing. And that means we just might make it back up to the lowest weekly zone. 66.90/95. Gold. This was the open. It's kind of messy. We took out this high by a little bit, but we came nowhere near this high. This was just sort of difficult. We did make it through the short target, hit the zone, consolidated for an hour, and then we dropped. And this low, remember this is Thursday, Wednesday, Tuesday. Look at the horizontal line on my cursor all the way over to Tuesday. See this? That's reading the chart. Okay. Knowing what to expect and understanding that 20% of the time what the market tells you to expect ends up not happening. Okay. So from this support, red and falling turns to blue and climbing. We get above the BBC, we get above the zone, and then we put in a high. This high was 29.31, 29.31.8. You see right there where the step line crossed blue and climbing. Is it starting to make sense? I hope so. So now we're above the BBC, we're above the zone. We still have one more zone left overhead on gold. The step line is crossing blue and climbing. So a failure to take out this high or this high could send us back down to the BBC and the zone. And we would have to get below the zone and then look for potential support right here. Resistance here. Call it 29.32. Support here, 29.07. Silver. This is where we open, pull back to the BBC, consolidate it at the zone, drop to the short target. Looks like almost to the tick. Okay. See where the step line crossed blue and see it crossed right here, red and falling, turned to blue and climbing right there. And that looks like that low right there. Support sends us to resistance, back to support, and we barely missed the long target. Only takes 2 pennies in silver to get your goal for the day. Now the step line is crossing blue and climbing. We've already had a retracement to the BBC, so we potentially find resistance here, or this candle reverses and comes back to the BBC. So that's all the markets. There's the daily. Now, this little shelf area, as I called it, that's from September of last year. But look at the impact it's having on the market today. In March, from September to March. People often ask, how far left do I have to look? As far as you need to. Okay? All right. To become a member, send an email to support@cfrn.net. In the subject line, put I want to become a member. In the body of the email, put your name, your phone number. We don't have any plans of calling you, but we will send you an email that explains everything. And a link so you can actually become a member. You get 2 hours of live trading every trading day. This is an interactive environment. Live markets, real time, real money. You're watching. You're asking every question that pops into your head. And you're trading along in your demo account so you can qualify to go live. The last thing in the world you want to do is start learning a new strategy and start trading it live before you even learn it. That might be what got you into the trouble you're in now. 9 out of 10 new traders don't have a teacher. You have one as a passport holder, 2 hours every trading day, along with the group training every day for 2 hours every trading day. You have access to private one-on-one mentoring, no extra charge. The strategy you learn, the indicators you own as a passport holder are fluid across all markets, all time frames. Price flows the same across stocks, futures, crypto, Forex, ETFs, from support to resistance, back to support, back to resistance, over and over again and again. It's a never-ending cycle. You don't have to learn everything there is to know about the markets. I dare say anyone knows everything there is to know. Not even Larry Fink over at BlackRock. In fact, you might know more than he does. You only need to know enough to get your goal for the day consistently, day after day after day. Once you qualify to go live, you're trading one contract. Your goal is $100 a day. After 20 consecutive days, you've made $2,000. You increase your number of contracts to 2. Now you're making $200 a day. The 24/20 blueprint will tell you when it's time to go live, when it's time to add a second contract, a third contract. By the time you get up to 5 contracts, now you only add one at a time when the blueprint says it's time, and you only add with profit you earned in the market. But by the time you get to 5 contracts, 2 points a day is $500 a day. By the time you get to 10 contracts, with profit you earn in the market, that's $1,000 a day. That's about $250,000 a year. You may have higher aspirations. That's okay. That's fine. But keep it simple. A lot of traders fail because they don't have realistic expectations, because they've gone to these scandalous websites where people talk about these crazy numbers and there should be a law. There probably is. But there's so many scoundrels out there, it's hard to enforce, I imagine. A realistic expectation. 2 points out of the S&P. 10 ticks out of crude. 10 ticks out of gold. And you have 10 trades available to reach your daily goal. If it takes you 10 trades to get 2 points out of the S&P, after commissions, you're still profitable. Let that sink in. Let's say today it's one of those great days. You place one trade and you've got your go over the day. But you had 10 trades available based on the blueprint. So what happens to the 9 trades you didn't use? They roll over to tomorrow. Huh? Yeah, that means tomorrow you have 19 trades available to get your goal for the day. And after commissions, still be profitable. And let's just say you have another good day tomorrow, and it only takes you 2 trades to get your goal for the day. Well, you've got 8 unused trades. You had 19, so subtract the 2 you used today. Oh wait, no, you get another 10 today. Wow, that's 29. Add 8 to that, you're 30. You have 30. Come Monday, you got 37 trades available to get your goal for the day. See, when you start to understand that and think about it in that manner, it takes a whole lot of pressure off you. It's not a matter of can I do it, it's a matter of just doing it. Everything a trader needs, all under one roof, one low price. Plus you get the golden key that opens the private channels at Telegram. We got public channels, we got private channels, we got a whole bunch of channels. But once you become a passport holder, you have access to all of them. Just send your email to support@cfrn.net. Yesterday, we talked about tackling your giant, whatever your giant is, head on. And we know David's giant was Goliath. Yours could be your marriage, your finances, your children, your job. Today's topic, keep hope alive. Hebrews 11:1. Now faith is the certainty of things hoped for, a proof of things not seen. At some stage in our lives, most of us will or have gone through times when things looked hopeless. But when you decide things are hopeless, you slam the door in God's face. First, take all your troubles or desires to God. If you've gotten to the stage where you feel things are hopeless, you've clearly neglected your faith, or you've been hoping for something that is not in God's will. Again, Faith is the certainty of things hoped for, a proof of things not seen. Second, give hope a symbol, something you can center your thoughts around. Jeremiah taught God's people a lesson in hope by buying land at Anathoth. See Jeremiah 32:9. He knew they would be taken into captivity, and during those long years, the memory of that faraway field in Judah would act as a symbol of future restoration. During World War II, when Leo Algamus and his family were herded into concentration camps, they maintained a symbol of hope. A tiny piece of paper from a box of chocolates with an American flag on the bottom. They passed it from hand to hand, looked at it, held it, and whispered about the Liberation Army that was coming. Symbols help us fix our minds on what's possible. In fact, the greatest symbol the world has ever known was the hardest to believe. A baby in a manger signaled God's kingdom on earth and changed mankind's destiny. And He can change your destiny. Define what you hope for. Ask in His name. And if it is God's will, no matter how impossible it looks, expect it to come true. And that's our good word for today. Thanks so much for tuning in. Oh, by the way, I know that most of you have questions about what Michael teaches you every morning in the live training room. I don't see any reason for us to have a workshop tonight. So you take your vacation tonight, and then next week we'll have a full schedule. Michael will be in the live training room every morning. We'll have the weekly workshop, but I think tonight we just take it off. Okay? All right. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.